I'm Catherine Cheney, a senior reporter at Devex focused on technology and innovation in global development, and I'm thrilled to be moderating this conversation on financing SMEs in the wake of COVID. So there is growing awareness of the critical role that small and medium enterprises play in the growth and stability of African economies. For example, at this year's United Nations General Assembly, UN Secretary General Antonio Guterres called for policies that support SMEs, given the critical role they play in making progress on the Sustainable Development Goals. But many of these SMEs on the African continent and elsewhere still face major financing challenges, and that's all made worse by the impacts of COVID-19. The SME market in low and middle income countries is mostly informal, but digitization offers an opportunity for banks to reach this market. So as we talk about the future of development finance, I think there's a sense of optimism when it comes to financing SMEs. I'm thrilled to welcome panelists who are working to tackle this challenge from a number of different angles. Joining us today, we have Adam Hadidi, co-founder and managing director of BluePeak Private Capital. This is a fund that provides flexible financing solutions primarily in Africa, and it recently launched a new fund to provide growth capital for African SMEs, which we'll hear a little bit more about. Kwasi Donkor is the Chief Strategy Officer for the U.S. African Development Foundation, which is an independent U.S. government agency established by Congress to invest in African grassroots organizations, entrepreneurs, and SMEs. And Cydney Ross is country manager at the specialty coffee exporter Tropiq. Previously, she was the head of programs and strategy at Kifia, where she supported SMEs to access digital markets and financial services. Welcome, everyone. Thanks so much for joining us. So a first question, just to give our audience a sense of what you're doing to tackle these challenges and opportunities. Can you talk about, we know that around the world, small and medium enterprises face financing challenges, particularly in low and middle income country contexts. But I wonder when it comes to financing SMEs in sub-Saharan Africa in particular, what are the unique challenges and opportunities? And maybe just give us a preview of how you're working to tackle those challenges and seize those opportunities. Maybe we'll start with you, Adam.
Sure, thanks, Catherine. I mean, from our perspective, we've been, we set up BluePeak to do exactly this, to finance SMEs that aren't adequately able to source financing from traditional means, which in many cases is banks. I think there's a number of challenges. I mean, I think building relationships, finding the right companies which are fast growth, and putting in place the right capital structure for these kind of businesses, and that's why we set up BluePeak. But linked to that, I think directing capital from more developed countries, from the US, from Europe, which development finances institutions are doing, but bringing that into the private sector as well. You've talked about technology, that's one means, but also through alternative investments. And that's something that's grown a lot in the last 10 years in Africa, but it's still a very small base. There's still a lot of growth to come. And that will only serve the continent well. I mean, I think over 60% of GDP in Africa is coming from SMEs, and trying to find more flexible solutions from the private sector is very important.
Just a quick follow-up question for you, because I know your investors are primarily development finance institutions. And of course, DFIs are a big focus of today's agenda. Can you talk about what does BluePeak Private Capital bring to the table for these DFIs in terms of their goals to reach SMEs?
I think we provide an additional way to source opportunities, finding the right businesses with which to direct capital. I think the nature of development finance institution is focusing on many different sectors and segments of the economy, but directing some capital towards a specialist in certain asset classes, strategies, sectors. We're one of the increasing amount of general partners that are doing that. So it's that specialization and also focus for the long term on these specific areas.
Great, thanks for that. Kwasi, I want to turn to you. So as I mentioned earlier, you're focused on grassroots organizations, entrepreneurs, and SMEs. So when we talk about challenges and opportunities, I'd love to hear from you specifically some of the challenges you've seen due to COVID-19. We know that the impacts have been devastating across many issue areas and sectors. What has that meant for SMEs in particular, and any new opportunities in the last 19, 20 months?
USADF, thank you very much for that, Catherine, and thanks for the platform. USADF is in the business of supporting nascent and sometimes already vulnerable SMEs and businesses across Africa. And the risk that COVID posed was one that threatened to roll back significant gains that we had made. And as the COVID-19 pandemic threatened progress USAID had made in improving the lives and livelihoods across Africa, what we did specifically was to develop a COVID-19 response strategy in April 2020. And so USADF provided over $5 million to something like 450 enterprises in across 27 African countries as part of our COVID-19 response. There's something we call the USADF CARES program, Capital for African Resilience Building and Enterprise Support. And really what we did was we outlined key strategic areas for our COVID-19 intervention that will build upon sort of what we have, what we call our participatory, locally led, demand-driven approach to development. And the intervention sought to do three things, right? So the first was to respond by providing grantees immediate relief and capital assistance. So, for example, iCarbon Integrated Resources Limited, a solar powered battery charging service provider startup in Nigeria, used our funds, USADF funds, to make up for revenue shortfalls and keep its operations afloat. Second thing we did was we supported grantees in repurposing and reconfiguring their business model. So to illustrate how this worked, USADF funds allowed a shea butter cosmetic company in Benin called Natura to pivot its operations and produce close to 2,500 liters of hand sanitizer shortly after the pandemic began. And even in Ghana, a USADF grantee called Alfie Designs repurposed its fashion garment manufacturing business to produce cotton face masks and medical scrubs and hospital gowns to meet the PPE demand. And the last thing that we did was and which is something that's still ongoing, is to build grantee resilience. And an example there was grantees in Liberia who credited USAID for enhancing their managerial and operational capacities to the point to which they collectively were prepared to secure $4 million in purchase orders from the government of Liberia's food distribution and school feeding programs during COVID-19, and several other USAID grantees were similarly I think positioned to access these new markets and increase their incomes during the pandemic. So I think the point is this, right? The coronavirus is here with us, right? And it continues to pose a great threat to SMEs around the world, and particularly for women-led businesses. The traditional market systems that we know have been disrupted, and SMEs have to adapt to this new normal by developing systems that help their enterprises survive the pandemic and recover, prosper post-COVID-19, and develop resilience to withstand future shocks. So those are some of the things that we did, and sort of over the last 20 months has been sort of the focus of our work.
Thank you, Kwasi. Those are some really helpful examples, and I'm really glad you mentioned women-led businesses in particular. That's something I want to make sure we delve into a little bit further in our discussion. Just a quick follow-up question for you, though. In terms of the stage at which you all are reaching and working with companies, can you help me better understand, there are some SMEs who this $250,000 grant is critical to being able to survive this COVID uncertainty and make it through. And then there are some SMEs that, at a certain stage move on to larger financing needs. How does USADF work with other players as SMEs go along their growth trajectory?
That's a great question, and I think it goes back to something that Adam started talking about, right? And maybe it'll be useful to just take a step back and talk about sort of some unique challenges that we face, right? And in terms of the SMEs across the continent and how we work, right? So you talked about it before, and then Africa and Adam as well talked about, SMEs, the 44 million SMEs providing jobs and economic opportunities every day for people across the continent. Unfortunately, sub-Saharan Africa is also currently the highest percentage of sort of fully and partially financially constrained SMEs worldwide, with 54% unable to obtain vital funding to start and scale their businesses, right? And for us at USADF, there are two issues that come to mind that our intervention are looking to address, right? The first issue is access, right? In its most crystallized form, imagine together, right? We have a shopkeeper from Kenya who would like to expand her business by purchasing a delivery van. Now, in order to procure that loan, she needs to have access to a bank or a financial institution. And without access to these services, she can't get the funding she needs, and her business never grows, right? And the second thing is really focused around affordability, right? Even if this Kenyan shopkeeper finds a bank that is willing to give her a loan, it's irrelevant if she can't afford the interest or the conditions that come with it, right? And these two requirements really act as a barrier for thousands of social entrepreneurs and SMEs in Africa who can finance their solutions. And for us, we at USADF think that blended finance presents an opportunity as a preferred tool and a game changer for African SMEs, right? And a lot of the work that we do sort of revolves around that and how we can use blended finance to address that. But we can talk some more about examples of what we do in that space at a later point.
Great. Yeah, absolutely. We'll get into more examples of blended finance. I want to bring Cydney into this. So Kwasi was just mentioning access and affordability. And I know you've worked with SMEs to access digital markets and financial services. So can you talk about some of the challenges first? And I'd love to hear you talk specifically about women-led businesses as well, since Kwasi brought that up. Some of the challenges, for example, not having collateral, and what are some of the opportunities that digital offers when it comes to these two key issues of access and affordability that Kwasi just outlined?
Yes, thank you, Catherine. So I feel in some ways the business where I was working was actually very fortunate during COVID, because it forced many of the micro and small enterprises whom we targeted to really focus on their digital marketing operations and actually be interested in engaging and participating with online markets. So we worked to train around 10,000 micro and small enterprises on our e-commerce platform, and provided an ecosystem of services and support that allowed them to access new customers that they previously couldn't have reached, even beyond their shop, which was closed during the lockdowns and the general fear that people had when COVID first started in this market in Ethiopia. So again, once you provide market, one thing we learned was that a lot of these enterprises didn't have any access to credit, and that was a constraint to their growth. So we were able to provide them new customers, but they didn't have the working capital they needed to keep the inventory in stock to actually meet that growing demand. And in response, we developed a digital lending platform that uses alternative forms of credit scoring algorithms to assess their credit worthiness. And based on our own research through interviews and desktop research, we estimate that the working capital gap for enterprises in Ethiopia, micro enterprises, is around $300, which is really quite small when it comes to thinking about the impact that could make on the some 80% of informal enterprises that are operating in the country. So we think about the $300 working capital gap. We worked with the one financial institution to offer these smaller lines of credit to MSMEs, but the other big issue that we learned is that financial institutions in Ethiopia specifically are not equipped to manage so many small loans. Although they have the desire to offer credit to micro enterprises as part of their corporate governance, they actually don't have the technology or the resources to do so efficiently. And that's where we came in with another technology platform that made it easier for the bank to assess those credit worthiness, but then also to manage the loan and repayment. So there are so many challenges. It's a multifaceted ecosystem that really touches not only micro enterprises, but specifically women-led when it comes to apparel, selling vegetables, even daily lines of credit, if they're working selling vegetables in the street or small goods, they don't have access to credit. And that's one of the ways that we're trying to support and strengthen them by offering these smaller lines, which really will help strengthen them and build resilience over time.
Thanks so much. Just a follow-up question when it comes to these alternative credit scoring algorithms. So this is a space that I've covered pretty closely with my focus on tech and innovation. And just for members of our audience who might be less familiar with just how much opportunity there is here and how much activity there is here. I mean, there are seems to be a plethora of companies and actors in the development community focused on alternative credit scoring. So can you just kind of, for those less familiar, take us through what does that look like and what can it unlock for enterprises that otherwise might not have a way to show their creditworthiness?
Yes, so excellent question. I mean, a lot of the times when you think about credit, I come from a developed market in the US, we have systems in place that allow us to understand who that customer is. It's called KYC. But when it comes to an informal enterprise or a very small enterprise, they may not have that data on hand. They may not have the financial transactions that they need to prove their revenue or prove their month-on-month capital or just general spend. And so when it comes to alternative credit scoring mechanisms, we use a variety of tools to understand that micro or small or medium enterprise. So this may include directly accessing their bank account to understand their inflows and outflows. It may include an assessment of their social media platforms, WhatsApp, Facebook, Twitter, Instagram, to understand their risk appetite, or just how likely they are to repay a loan. We may call friends and family if we're able to have access to that, to really help us build a holistic and complete profile of who this enterprise is, which gives the banks enough confidence to extend that line of credit and appropriately assess that candidate's likelihood of repayment. So there are a plethora of platforms or a plethora of mechanisms, but what we focus on in ADA specifically is social media and their bank transaction history if they have a bank account. And other markets that use mobile money, and Peso is really popular for that. And so we're not quite there yet in Ethiopia, but we really hope that in the future we are able to leverage mobile money accounts as well.
Super helpful explanation. Thank you so much. So Cydney just talked about when it comes to how digitization offers an opportunity to reach and support SMEs. Alternative credit scoring is a very clear example. Kwasi and Adam, I wonder if you can jump in with what does that look like in your work? Where does digitization come in and unlock some new opportunities? Maybe we'll start with Adam.
Sure. I guess in our work, we come at it from the other angle. We're very much a long-term investor. And so we spend a lot of time, technology has helped, but face-to-face understanding the businesses that we invest in, because, we'll be partnering with them for 2, 3, 5 years or longer. Where we see it is actually in our companies that we're investing in our portfolio companies that we've invested in, the ability to leverage technology just opens up all sorts of different growth opportunities. Whether we've seen it in logistics, in healthcare, in education businesses, in fintech, of course, as we're talking about. What we see is this just tremendous opportunity driven by digitization into different markets, into different countries. But the piece that has been still maybe missing for particularly with what we do is SMEs in kind of a later stage of their trajectory, where the problem of financing that growth is still there. The opportunity is there, but finding the right long-term finance solution is often still not there. And this is where we see a kind of tremendous opportunity.
Yeah, interesting. So it almost sounds like where you see digitization playing a more meaningful role is actually in the day-to-day work of SMEs. But in terms of financing SMEs, it hasn't necessarily caught up. Really the financing sector, and perhaps we'll get to this toward the end of our conversation in terms of where do we go from here, could do more to harness the power of digital to finance SMEs. Kwasi, what about you? How does digitization come up in your work? And kind of building on Adam, where are you not seeing digitization having the impact that it should, perhaps?
Well, I think that really, the way that the tack that I'll take with this is to, just think about it in a different way, right? In terms of how the perspective we provide in terms of how we support our grantees and recipients of our funding, because digitization really opens up so many avenues for SMEs to reach their customers in really previously unimaginable ways, right? And so for us at USADF, it's really about playing a role across this sort of shifting paradigm to ensure that they're able to meet their customers and see their customers, right? Because and sort of our point of departure is really thinking about how 40% of small businesses fail due to lack of funding and business expertise. And so how does digitization come in, right? And so the best illustration is some of the work that we do with some of our grantees. So Impact Her is in Nigeria is one of our grantees, and is working to minimize such failure by supporting 500 women-led businesses that do not have an online presence, right? And to help transition their enterprises to technology platforms with training and helping them to become more digitally savvy in this sort of post-COVID environment. And Impact Here is also transitioning these women SME marketing systems for business growth while enhancing business expertise and capacity for increased investment access. But another grantee in Kenya called Women Work Ventures is doing something a little different, right? But they are doing it from the perspective of building the capacity of these women entrepreneurs through skill developments to ensure resilience. I think that's really important, right? Because beyond our interventions, what happens, right? And they're doing this through a number of different vehicles, right? One is strengthening their access to capital. Another one is really increasing the networks of these women entrepreneurs by exposing them to revenue generating opportunities through a sort of a peer-to-peer digital community, right? And really, Women's Work Ventures is able to do this because the funding provided by USADF goes to support these women-led businesses so that they can digitize their operations, they can make data-driven decisions, and really acquire customers online through the multiple digital platforms emerging across the continent. So really, that's the sort of approach that we take as we engage with digitization.
One thought to share, and I'd be curious if any of you want to chime in on this. Earlier, when Kwasi mentioned access and affordability, that was in the context of financing solutions for SMEs. But when Adam and Kwasi as well are talking about how SMEs are actually leveraging digital and putting financing aside for a moment, how critical it is to their work and the growth that enables them to access financing. For me, I think about access and affordability in that sense. So access and affordability to technology, to the digitization that can allow these companies to grow. So I just wanted to throw that in there, that when it comes to access to electricity, connectivity, affordable devices, that allows your business to get to the place where you can then access financing. That's key too when we talk about access and affordability. And that might not be a challenge you all are necessarily tackling through your work, but perhaps through partners. Is that something you want to just touch on when we talk about access and affordability? It's to the tech itself, not just financing. Cydney, you want to jump in on that?
Yeah, I have some comments. So one thing that we learned in trying to get so many micro and small enterprises online and e-commerce is that many of them don't have access to a smartphone. And that's simply because they can't afford it. There's no device financing programs in Ethiopia. The cost of data is very high. And so that became a barrier. And it's not even, that's not even addressing digital literacy, which in some cases is actually quite low. And you can't really support someone to have access to an online market if they don't understand the basic rules of a smartphone, how to open and close applications, how to go back and forward. And this is in no means a way of demeaning or saying that, people in Ethiopia are so behind on technology. It's an opportunity, and it's a way for us to really coach and support particularly women enterprises to use these new technology platforms, use their network, even use our agents who we put in the field to support them on a day-to-day basis to integrate digital into their daily lives. And in some ways it's amazing for their business, but as a country, it's amazing to be able to offer and watch individuals engage in a digital world, because it is a way of the future, and it's a way for them to unlock so many new opportunities. Going back to the device financing, we actually introduced a new digital lending product that offers a smartphone on credit to these micro enterprises who have good transaction and good transactional history in our platform, because it's both a way to verify their sales, verify their commitment, and also it's easy repayment. We take it out of their commission, right? So it becomes this cycle that we're able to reinforce their digital engagement in a way that we also provide them incentives.
Thank you, Cydney. And I want to quickly return to the topic of blended finance, which Kwasi brought up. Quickly, Kwasi, Adam, any thoughts on whether it's access to finance for SMEs or access to the digitization that can help them grow as a business and access that financing, the role that blended finance can play? Kwasi, do you want to jump in on that?
No, I'm happy to. I think that, maybe a jump off point is to really talk about, where we are in terms of, if you think about barriers, right? And then I think I recently read a statistic that, there's $200 billion of dollars worth of capital coming into some of the developing markets, right, to help with the financing gap. Now, the SDG gap is about $2.5 trillion. A way to close that gap is if the private sector comes in. But if you take sort of global markets, that alone is in excess of 200 trillion in value. So that 2.5 trillion I talked about earlier is just about 2% of it, right? But investors are not coming because of impact alone. They come because of return, right? So we have to celebrate all financing models. And this is not a question of either or, right? And so there's a world where philanthropic dollars, such as what we have at USADF, can help strategically. So I think that what we are saying is that, that is what blended finance is trying to do, to change the mandate and the objective of investors and help convince investors by using, philanthropic dollars to take perhaps that first loss layer. But also to say that these investors will not lose money. And by the way, say that we are creating vehicles that are investable for them, but ultimately it's part of that DNA. And that's really what we are doing at USADF, right? It's really thinking about what that would look like. And just as a quick example, under the U.S. government-led Power Africa initiative, we partnered with the private sector to launch the Off-Grid Energy Challenge, right, with the aim of funding energy entrepreneurs working in renewable clean energy technologies to address Africa's energy poverty, right? And through this partnership, we awarded a Nigerian solar energy company called ICE Commercial a $50,000 grant, which was matched by a $50,000 convertible note from Allon, which is an independent impact investing nonprofit based in Nigeria. And with this financial support, ICE Commercial conducted 107 SMEs to clean and reliable solar energy. We think that the future of African development relies on the utilization of these types of catalytic and innovative funding structures such as these. And yeah, let me stop there for now. I know that we're running out of time.
We are, but that's a perfect segue. So you talked about the future of African development. I do want to look toward the future. Of course, today we're talking about the future of development finance. So the future of financing SMEs. Basically, I mentioned at the outset, there's a lot of awareness of the importance of supporting SMEs. There are creative things being tried by you all, as well as many of your peers. But where do we go from here? Looking toward the future. Everyone tuned into this conversation cares about this topic. This is an engaged audience. So what's a final thought or call to action in terms of where we go from here and how we ensure that coming out of COVID, there is a better, more optimistic, hopeful future for sub-Saharan African SMEs. So maybe we'll start with Adam, and then we'll bring in Kwasi and Cydney for final quick thoughts.
I think the long-term opportunity is tremendous for SMEs on the continent. I think continuing for the public sector, for development finance institutions, to mobilize capital from the private sector and working in conjunction with each other, because there's great long-term investment opportunities, and for investors from more developed markets to see that and invest in these opportunities is only going to increase, and it needs to continue in that trajectory.
Thank you, Adam. We'll bring in Kwasi next, and then maybe we'll close with Cydney.
No, I think this is great. I mean, I think it's a fantastic conversation that we're having, right? And I think that, at least from the point of departure for us is really thinking about sort of the asymmetry of supply and demand, where there's a lot of competition for deals that essentially increase the cost of capital, which is why USADF's role is significant in supporting this need, right? It also means that, at USADF, we have to be intentional about how we work and we cannot be plain vanilla with how we support the recipients of our funds, right? So I say all that to say that, at USADF, we think that first, capital must be flexible, but more importantly, we also are starting to think intentionally about what it means to graduate beyond the resources of USADF, right? How do we connect our grantees to what we call ADF, money after us, right? And this is an approach that guides how we support SMEs. And it's also important that we don't lose sight of our core mandate and the need for an organization like USADF.
Thanks, Kwasi. Cydney.
Yes, some last thoughts. Thank you all for the conversation. I think for me, as a player in the fintech space, it's really to focus on unique and fit for purpose financial products that cover a wide range of micro, small, and medium enterprises. How do we build trust within the community? How do we build on financing, informal financing that's worked successfully so far? And then most importantly, how can we digitize it and scale it? And I think that is a challenge that we will continue to face, but it's an amazing opportunity to create impact amongst the millions of enterprises on the continent of Africa.
Thank you, Cydney. Well, it sounds like COVID-19 has created some unprecedented challenges when it comes to financing SMEs, but also unprecedented solutions in terms of what's being tried. And so hopefully we can learn from this and work toward a better future in this space. Thank you all so much for your time.
Thank you. Thank you so much.
Thank you.